Traders all over the world are already using switch markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear, they disappear, sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment. Executed with clarity, without hesitation. Because control is choice. And in that moment, control becomes edge. Switch markets. Trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Tuesday strategy session. Today, we're going to be talking about the Forex, the commodity markets, some stocks. We're also going to be looking at U.S. oil almost exclusively today. Big time move in U.S. oil. We've seen both Brent and WTI trend to the south over the past 12 to 18 hours. The reason why, we've got the latest announcement out of the U.S. President Donald Trump that the Iran war is going to be ending relatively soon. So I want to go ahead and stress that don't get too carried away. Don't put the cart before the horse here, because we've heard this, I believe some of the live counts were upwards of 40 times already in the last 100 days. So we've hit the 100-day mark of the war. I believe this is day 102 where things are still active, but we did have some interesting headlines come across the board in the last 12 hours or so that suggest that maybe a deal is near. Trump said the next 2 or 3 days there was going to be a peace deal. And if that is in fact the case, that is definitely the market driver behind our oil. So we're definitely going to start with oil. Then we're going to dive right into whatever you guys want to look at today. We've got some key levels in the dollar yen we need to look at. Great Britain pound, Australian dollar, big move on that 920 EMA breakout. We didn't quite get entry. I'm going to sort of walk you through why sometimes waiting can be a bad thing on those trades. But in all honesty, the NASDAQ 100 off another 3% ahead of the SpaceX launch on Friday. I mean, this is all systems go. When you talk about, Shane, when do you like to trade? What exactly do you like to do in the markets? When do you like to trade? Days like today. Days like today are absolutely fantastic because there's so many opportunities. There's so much action. And if you're not already involved in the markets, I have to tell you, I mean, you guys just saw the ads for Switch Markets. You ought to consider taking a look at the next 6 weeks. Typically, I like to go on vacation in the summertime. Not this summer. We're in for some great trading, and we're gonna have an opportunity to be, I would say, active. And that would be the word that I would describe this summer as being active. So I want to welcome everybody back to the trading room. We got a lot of folks out there in YouTube land. Good to see you. Let me see Kelvin. How you doing, Kelvin? Always a pleasure. 1906. What up, Shane? Hope you're well, sir. I'm always well. 1906. MIS. Tough name to say live, but I'm always doing well. I feel pretty good. Got over the jet lag, hit the gym yesterday, got some good nutrition, good sleep. I feel good. If you believe it or not, I'm 47 tomorrow. So I feel pretty good for almost being 50 years old. I'm almost I'm gonna spend the next 18 hours, 24 hours counting my blessings in between trades. But yeah, I feel really good. Thanks for asking, 1906. Jason Max and Yo Shane. Yo Jay, what's happening? Tina Jean, good to see you back. Tina, welcome. Hello. I'm confident that your travels went well and you had a fantastic time wherever you were. Sure appreciate you coming back. If you guys have any questions at all, be sure to ask. Remember, this is an interactive trading experience. So if you have anything on your mind that you want to say to me, go ahead and fire away. If you have a question that you'd like to ask, I'll do my best to help. A couple of rules on my live streams. Number one, if I don't know the answer, I'm not going to BS you. And number two, if it makes money, it's the right answer. That's the bottom line. So I want to welcome everybody in YouTube land over in our How to Trade community. Good to see everybody back. Tuku, good to see you, Tuku. Always a pleasure, guys. Ralph H., remember, if any questions at all, Ralph had a good one yesterday about understanding, when exactly something's been priced into the market. That was a very, very good question, and one that we could talk about further if you'd like. Let me see. Tina, thanks. Yeah, came back yesterday. So you're probably a little jet lagged too. I'm just now getting over it. I had to get some sleep. I had to get about 3 days of sleep to kick the jet lag, but it was really a fun trip. So I'm glad you had a great trip there. Kelvin, what do you think about the US 31 hour? Well, I guess that's a good place than any to start. Let's go ahead and dive into the US 31 hour. I'm going to go ahead and just use the trading view. We'll go ahead and take a look at that using the Fibonacci's and things. 1 hour charts for the U.S. equities indices. I'm not a big fan on it, but if that's your favorite time frame, that's fantastic. Just real quick, our macro levels. I always like to start with our macro levels so we understand sort of the broader sense of, or get a broader sense of what market state is. Things are coming off this week. Big week last week, done nice big euphoric highs up about 50,000. Now we're coming off a little bit. The real question is everybody selling their stocks to buy SpaceX on Friday? I think that we could say that. I think that we could build the case for that. But as far as I'm concerned, I'm definitely watching the 50,073 level. That probably is going to be a trade idea for later today. That would be the biggest level that I would be watching for the US 30. Now, as far as the 1 hour chart goes, more than happy to take it right down to brass tacks and get after these intraday time frames. Okay, very simple. Very simple read right there. What do you have right there? You've got the 7 a.m. then opening bell ding ding right there. I typically like a 30-minute chart, but a 1 hour, whatever suits your fancy. This is a big move, significant move, about 1% loss there from that, 11 o'clock to 12 o'clock hour out in the East Coast. Typically that signifies sort of the end of the London session, but you've got the nice big sell-off, and then we based right there. So what do we have potentially? I would run some Fibonacci's here, something like that. Okay, so I would definitely be looking maybe later in the session to sell 50, 61, something like that. My only problem with this one, Kelvin, and using the 1 hour chart is this price bar right here does not give me a good representation of the U.S. Open. Now, I know, volume picks up, business picks up, and the game's on right there, but I'm still not really, I think we need a little more granularity before we really start looking at it. So what do we have now? You'll notice the picture is relatively similar, but what we have down here over the past several, hour and a half, 90 minutes is a market that's expanding. That's that megaphone formation where you go from tight to large, meaning the price bars here are tight, and then you're starting to get larger price bars that are trading both sides of the previous range. That typically means that we don't really know what's going on. Usually as the process of price discovery goes, we get the big move, and then we dial in a price as opposed to maybe going from small to large where, we thought it was worth this and now it's worth this, indicative of a hot news feed that has all to do with Iran. So is this going to be the same trade? Yeah, pretty much. 50,000, 611, 38% would be big for me today. Significant down day yet again for the US 30. So I'm watching stocks closely. I think that the SpaceX action, I know I've been saying that a lot, but SpaceX is definitely one of those things that we have to always have in the back of our mind. When we have a huge economic event, a financial event, like an IPO, like a high profile IPO, I mean, do people sell and take profits going into something that they feel like they could make a 10-year investment and create generational wealth? Now, a lot of folks would laugh at what I'm saying. You put me on CNBC right now, they'd say, nice hoodie. What are you talking about? Well, what I would say is this. It's definitely a factor. There's no question about it. If I'm in the US 30, and let's say I bought down at 38,000 or 40,000, I just bought an index fund, a raw index fund, and I've hauled in 40% or 35%, and I feel really good about that 50,000 level, would I be inclined to take some profits and maybe scale into something that a lot of folks believe is going to begin trading SpaceX at 135? But a lot of folks believe partnerships with Google, building data centers in outer space. What could potentially SpaceX be worth? Is it worth 135? There's people thinking that potentially a merger between SpaceX and Tesla, they're talking about it like the next Berkshire Hathaway. Now, Berkshire Hathaway was a firm that bought other firms and built portfolios. That's Warren Buffett's company. And what is the share of Berkshire going for right now? Well, that's not right. It's going for a lot more than 127. It's a private company, Berkshire Hathaway. So this is A and B shares. Let's go ahead and look at the A shares and see. All right. Essentially, that's what you're looking at, 734,000, something like that. So when we're looking at something like a SpaceX, a lot of folks believe that, it really could become something like a Berkshire. Is $135 a share a bargain? It's life-changing money. So if I'm going to dump other positions to try to get in on the ground floor of a SpaceX, you bet that's happening right now, and you bet that's bringing downside pressure to the markets. It's one of the deals where the tail wags the dog. So this is a big week, and I was excited yesterday. I'm getting more and more excited today because we're starting to see some real movement and some real action, and I like action. I definitely like action. So that's sort of what I think about the US 30. I would be looking to sell it. Just a real quick recap of the idea there. It's just you're looking to sell. It's not a strong trend day down, but you have to respect the bearish action in the US session, and maybe selling up there at 50,000, 611. Probably a pretty good area for you to be looking to take that US 30 trade to the short. But once again, I'm not a financial advisor, so I can't really tell you what to do. A couple of things that we do need to look at, though. Switch markets. You can see we've got all sorts of tools over here. Switch on your trading ambition. Description. We did drop the link to the 9 EMA strategy over in the live chat there on YouTube. But the homepage has got an update if you guys want to cruise by and check it out. I always like to promo the resources as much as I can. The resources, we put a lot of work into these. You've got all sorts of things that essentially are designed to help you trade, and that's called value added. That's one thing that the switch markets folks do very well. Let's go ahead and focus on the economic calendar. This is going to be a big one as we roll into tomorrow's session. Go ahead and drag and drop and see what we have here. But you'll definitely be looking potentially, well, let me get it going again. But we'll definitely be looking at CPI tomorrow morning. I do want to go ahead and go over some of that today. Once I get that up and running, I guess I lost it. But once we get that up and running, I definitely will. I want to run through the expectations for CPI. I think that's absolutely imperative that we understand exactly what to expect for tomorrow. So economic calendar is a good free resource over there at Switch Markets. You just go right under tools. And what this does, it brings up all the events that we essentially cover here today. So if we're looking at something like this, tomorrow is going to be a big one. I'm going to go through a little bit of these existing home sales changes today. But for tomorrow, June 10th, I'm looking definitely we're going to have CPI live for you here. I'm going to go ahead and unpack what to expect before the number drops, and then we're going to trade it live. We'll trade something like the 9 EMA strategy live probably, maybe the 920 EMA crossover. But this tomorrow is going to be the big one, 19 hours, 18 minutes from now. We will definitely be getting down on that. So if you want to come on back and do some live trading tomorrow, bright and early here, Mountain Time where I live, we're going to be seeing some big-time numbers. This is going to be a big deal. Really a big deal. Most people believe year over year the CPI is going to come up, but we're expecting it to come down month over month. I don't know that that's going to happen given really how extreme the fuel pricing is here in the United States. All right, let's get on to WTI crude oil. We promised a commodity talk here, and we do have to talk about commodities because they are the number one market driver in the world right now, and it all stems from the Iran war. We've talked about it for the last 100 days. I've probably talked about it 95 of them. I'm tired of talking about it. Let's all hope and pray, I guess, for a swift resolution of this. But these are the headlines, and this is what's driving market sentiment. Israel pounds Lebanon. Trump says deal may come within days. Trump was saying 2 or 3 days. Right there live, Trump says Iran deal possible in 2 or 3 days as Israel and Hezbollah keep fighting. So what we're looking at here now is we're looking at Trump basically trying to wrap this thing up. And you're definitely seeing the impact on the oil markets. The oil markets are starting to believe that potentially this is going to be the way forward. Now, remember yesterday, if you've tuned into the live stream, I talked about WTI crude oil futures rolling over, meaning we're getting ready to roll from that July contract to the August contract. And the August contract is priced right down there, as you can see right here on my tote board. It's priced at about a $2, I would say a $2 discount over July. So right now we've got July WTI trading at about 88.13. Sort of the bottom of that range that I pointed out in the weekly market analysis. We'll talk about that a little later. But we're trading about 88, so it's sort of the bottom end of this range that we've been trading in for the last 100 days, 90 days. So 86.50 is what we're trading for the August contract. So the volume split's very real, and we're getting ready to roll over. So if you are trading U.S. oil, it is still tracking. These CFD products are still tracking that July contract, but we're getting ready to roll the Augie. So once we roll the Augie, you're going to see price come down probably even more. So if you get a piece deal coupled with rollover, we're in position to see a major sell-off in WTI here relatively quick. Now, do I believe that's going to happen? No. I'm sorry. We've done this dance with the Trump administration so many times. Oh, the war's over, total victory, yada, yada, yada. I believe the live count in the media was 38 times that he said this. Think about that, 38 times that they've declared this war pretty much over and a victory has been assumed over the last 102 days. So we're talking about once every 3 days, we're getting a statement from the Trump administration saying that the war is over. So pardon me if I'm skeptical, but something like this, spike low, this sort of was our range that we'd been working with, right up there to those wartime highs, right just short of 120, and we're sort of rotating right around the 50% level. That's not an accident. The markets are rotating near these levels because they don't know what to do. Now, if we knew that the war was going to escalate and if we knew what was going to happen, price would be way up here for WTI crude. Price would be way up here. If we knew that the war was over for sure, we would be right down in our gap area, right around 68.50. No question about it. That gap area, more than likely, when the war's over, will be filled. I have no question in my mind. However, Where we're at right now is we're at 50% of your pre-war lows to your wartime highs. What does that mean? It means that the buyers haven't won and the sellers haven't won, and most traders out there, including me, go, I don't know which way it's going. There's a lot of power in I don't know. Just saying you don't know can save you money. It keeps you trading when you shouldn't be trading. If you don't know, don't trade. And I've scaled my action way back on WTI. Most of what we're doing, most of what I've been doing lately has just been market profile trades, the point of control, value areas and things, because trying to figure out which way this market is headed directionally sort of seems to me to be a fool's errand. It really does. Unless we have inside information and we know if there's a peace coming or if escalation's coming, then it's really difficult for me to say, okay, top side's the way, downside's the way. It's really tough. So when I look at something like this, I go, yeah, about 50% is about right. So, I mean, if you're interested in a downside support zone for later today, maybe 87.25, probably a pretty good one. I would be shocked if we go anywhere from this zone until an announcement's made on the future of the Iran war. Low, last month's low is 86.35. This month's low is 85.95. So we've already sort of peaked beneath that level and we're rotating back up. This is tough environment. So 87.25, maybe a late day bid today. 62% right down there at 79.62. Pretty good area to be looking at a late day bid, and also that 13-month EMA is at 78.49, 78.50. This level right here would be probably a very, very good area to be doing long scalps if, in fact, we do see a big sell-off based on a news item. So I'm watching WTI crude closely. I'm looking forward to getting back to trading it without having to try to guess what Trump's going to say every single day. Andrea Garwell, good to see you out there in the How to Trade community. Good to see you, Andrea. Welcome. Let me see, Kelvin. How do you trade WTI? Would you like advice to trade it on bigger time frames? I would avoid trading WTI on larger time frames right now. No way. Until the war's over, until we see an announcement, until we see this market sort of get back to where it needs to be. I firmly believe that it's overbought in a big, big way just because of the supply issues coming out of the Strait of Hormuz. So I have no doubt in my mind that when it's announced that it's over, you're going to see a swift sell-off. Then reality is going to set in. The reality of, okay, how much oil exactly is flowing through the Strait of Hormuz? And when that reality sets in, price probably is going to creep up for a while, probably until the fall. That would be my diagnosis. Now, for right this minute, scalping off of these levels is a pretty good idea. As far as trading intraday, we'll do some of that maybe a little bit later towards the end of the stream. We could definitely go to the oil futures here and do what I like to do on the 30-minute chart. This isn't really a good time because of the volume split. It's got to be about 50-50 by now. But what you would do is you turn on your TPO charts, and you can see right here, okay, we're at the point of control. Overnight point of control is here. You'll notice that the volumes are way down, and that's because the volume split is on. So today would not be a day where you're trading the point of control. However, if you wanted to do it, they're right there, 68. So 87.68. We're at 87.78 right now. We can go ahead and place a trade, I suppose. I would deem this as a higher risk trade, and this would be one that I would definitely want to keep an eye on. So we go ahead and rock 2 lots. Let's go ahead and put 3 lots on there. Let's rock a 3 lot, buy limit order, and I want that right on the point of control. Let's just drag that down just a little bit, right on the point of control, right around 87.69. Let's go ahead and put it in the queue. So this is a very tight trade. Okay, it's coming to us right now. Very difficult to sort of put our finger on what's happening because the volume isn't really there. I could show you the volume split here in just a second, I suppose. Okay, so now we're officially long. We get the quick bounce off it. Let's go ahead and see if we can sell 75s for a real quick scalp. I mean, that would be a very good trade. 6 ticks, $180 in the bag. Okay, we hit 75. We didn't quite get filled. Do we hit it? Do we hit it? Do we hit it again? Right now, I don't like that. I hate that when I get hit and I don't get filled. Still in very good shape to get this trade probably off the board, but we should have already been paid off and made our 180. Now I'm looking at the price action saying, okay, we're back down to break even. What could potentially happen from here? We could break beneath the point of control. And if that happens, then we're probably going to just look to exit the trade, maybe get out at break even. But right now, we should be in pretty good shape for this market to rotate up to our 75 mark. Did you see how it hit us immediately and we did not get filled? That right there is it's the number one risk of trading these markets when there is not enough volume and depth in there. What happened? We rotated right back up to 75. We did not get filled because there wasn't any there wasn't any buyers there. See, look, okay, it took us a while to get filled. We finally got filled. We made our $180, but it was like pulling teeth. How many times did it hit us? It hit us twice, 3 times. I mean, let me illustrate sort of my point here. I want to sort of show you guys what I mean by the volume, because when you go to trade something like a futures contract or a trade a Forex pair that is very thin, when the market is thin, things like that happen. And we'll get back to the chart in a second because it's not going well. We should have been in and out of that very quickly, and it turned into a real problem for us. And now the market's rotating to the downside. Now there is a question. Okay, so when I'm talking about volume, I got this question yesterday. Shane, what is volume? You always want to be trading where the volume is. Now, 201,000 to 116, that's about a 66% split, 2 out of 3. So you're right here, you're starting to get that volume dilution creep into the market. And what that means is you're thin. That means that at my level, I bought in at 69 now, and I wanted to sell 75s, right? That's a quick scalp. That's 6 ticks. We're looking to get in and out, 3 contracts, $180. That's what I want. Well, when I went to sell and close my position out, there was no buyers at that level. And there was no buyers at that level because the market was thin, more than likely a product of this two-thirds market split, volume split. There's an old saying about trading WTI during rollover, and it's something about a 10-foot pole. Don't go near it with a 10-foot pole. Not that kind of trade anyways. However, we were profitable, so I'm not complaining, but look at what's happened now. The market's fallen away. We did not have much of an opportunity to get out right there, and that's the kind of thing we really need to avoid. We need to make darn sure that when we get into a trade, we can get out of it. Look at this market just absolutely fall away. Pretty good trade, just taking the money up front and bouncing. So we're plus 180, not a bad trade. Watch doing stuff like that during rollover. You don't want to be a part of that during rollover. That could be really problematic. Think about it. If we would have stuck with that trade at 75 and I didn't get filled for 75, now we're trading down at 35. I probably took a loss on it, more than likely. And that's the difference between being a winning trader and a losing trader. Those swings, the money that you could have made, and then taking the money at the loss, that's what can do you in. It really can. All right, let's get off of crude oil right now. The Great Britain pound Australian dollar. This is one that we looked at in the market analytics, the market analysis piece that we put out yesterday on the Switch Markets YouTube channel. Go ahead and pick it out. I basically went on and on about how waiting for a pullback was probably the best thing to do on a daily chart. Great Britain pound Australian dollar. We were looking for a pullback to our 9 EMA and 38% retracement. Well, it never developed. So a lot of folks would be really frustrated by this trade. There was your daily buy. We talked about it. We scoped it out yesterday. There was your daily buy, Great Britain pound Australian dollar. Next day, sort of a dud, came back down a little bit, and then the third day it absolutely explodes and really is headed towards a major profit. So when I look at something like this, I say, man, we missed out, because my basic game plan was to wait for the pullback down here. Our 9 crosses over our 20. That's our buy signal. And then we're just sort of waiting there for our pullback bid, and we just never get it. You know, it's the old saying, some wait forever for ships that don't come in. Our ships didn't come in. And that right there can be a major psychological hurdle, not unlike this one. Almost getting filled up and then having the market reverse against you. Those are psychological killers. That type of thing will really hurt you over the long run. So what I say is this: be consistent. Find a risk that you like, find a time frame that you like, and execute the trades. If you want to go in automatically on that signal, which essentially is what it was, and it's worked beautifully, your bid right there was about 89.33, and now you're up about 120 pips. Pretty good trade on that Aussie, that Great Britain pound Aussie. However, if you want to wait for pullbacks, then just be consistent. Wait for pullbacks. If you're consistent in your approach and you're systematic with what you're looking to do, and you look at that and you say, okay, it didn't pull back, so I don't have a trade, then don't worry about it. Then on to the next trade. There's plenty of other trades. Believe me, there's plenty of other trades to look at. But that one right there, that Great Britain pound Aussie, daily 920 EMA crossover, that's a tough one to beat. That is a really tough trade to beat. Got the big break today, up almost, 0.61%. That's a big move intraday for one of these. So still watching that one. We'll see exactly what happens tomorrow. Maybe it comes back down, but I doubt it. It looks to me like it's taken off to the moon. So were we on the rocket ship? Nope. We missed it. Well, always remember this. You never, ever regret the trades you miss. You focus on the trades you take. Focus on our execution. Be as good as we possibly can when we execute. And if we miss a trade, There's more tomorrow. There's great trades right around the bend. The best day to trade is tomorrow. The best trades of your life are coming next week. If you think like that, you'll be in the game a long time. If you don't, if you think your best trade was yesterday, then you probably might as well quit right now. Because if you made your best trade yesterday, unless it was worth $3 or $4 million, there's probably no reason to keep going, right? A little psychology here on a Tuesday. All right, let's go on over to our 9 EMA trading strategy. I did want to check this one out. As you can see, these big elongated 5-minute bars, I sort of preached against taking trades like this the other day. I said, when these bars get elongated like this, your risk factor really goes up because these ranges are huge. So to take this trade on this 9 EMA, you'd have to buy right up here, 5-minute chart. Look at the range of this bar. Is that conducive to success? No. Could I take it right now? You'd say, Shane, you want to buy beneath the 9 EMA? I'd say, well, we certainly could. It's higher risk, but what we really are interested in is where we get out at. So let's go ahead and put a buy down. Let's go ahead and buy a Brent. Let's buy a WTI. Well, how would I manage this? Right beneath the price bar. That is a big price bar. I don't want to fiddle around with any of these swing lows or any of this. In my view, the bidders need to be here in this vicinity or they're not. And if they're not, that's fine. Something like that, that would be the trade. Stop yourself out beneath the price bar. You sort of bought the 50% mark, it looks like, or maybe a 62% retracement of that bar. Potentially, that may not be a bad trade. Let's go right here. Could we do the same thing? Yeah, same execution. Couple of things about placing trades like that. Number one, this is a 5-minute chart. All right, we're going green right now, so we're all patting each other on the back, feeling great. But this was a while ago. That move was a while ago. Look at that. 5, 10, 15, 20, 25, 30, 35, 40. That was 45 minutes ago. Does that initial signal still mean anything 45 minutes down the line? On short time frames, I would say no. Why'd you take the trade then? Because the trade had two things that are very important to every trade. Number one, for me, first and foremost, it had a stop loss. Stop loss is big. I know exactly where I have to get out of that. Now, a lot of traders are going to say, put it beneath that swing low down there. I go, I don't really care. If we get chopped out in here, odds are we're not going to go back up and get my money anyway, at least not today. So can we go beneath the swing low? All right. Just do it for the sake of argument. Does it make that big of a difference? Not really. I would be shocked if the trade doesn't trade beneath this level and take that out. For me, I think you're pretty good to go right beneath that signal bar. However, we could back it off a little bit. Now, is that wrong what we just did? It's not wrong as long as you get paid for your effort. Something like that. Bring it into at least a 1-to-1. Something to think about there if you're interested in maybe getting creative with your entries on this 9 EMA. I personally, that kind of trade right there, I don't hate it, but I also don't recommend it because I know that a majority of the time when you buy in down here on say, a buy signal where we were really looking for this thing to break and hum, instead it calmed down, went back to the 9 EMA, and we go in down here, I know that I'm going to jump on about 100% of the losers. If this trade, in fact, ends up being a loser, I'm probably going to lose because my entry point, I already know that this isn't really a huge action trade to the top side. It's rotated back down. So my odds of losing this trade have gone up immensely. Now, the reward, is the reward better? Well, that's the other thing. Maybe, just maybe, we're being too conservative. Maybe if we got our stop loss, maybe the take profit should be up in here somewhere, thinking that this was the beginning of something really good and we could take a position there. That's another way to look at it. Yet another way to look at it is just to say, you know what? Why are we messing with the guesswork? Both of these trades are in the green. We got a little bit of a bounce off about the guts of our signal bar. Maybe we just leave right now and take the money. There's nothing wrong with that. We're trading one lot of Brent crude and one lot of WTI. Right now we're up about $721. Do we take the money? You guys can see that your creativity is your single greatest attribute. You got to figure out how you want to do this. For me personally, I would be looking at this saying, okay, we bought the middle of my signal. I did have a buy signal a while back. I'm still below the 9 EMA, but we are rallying a bit. I would say probably just take the money. Now, can you do that over time successfully? Yeah, you can. You just got to figure out what your percentages are, and you can do it. With AI now, you can code anything. You could code, okay, my 9 EMA, instead of buying in up here, maybe I buy at the 50% level of each one of these signals. Does that give me a longer-term profitability? Maybe. What's my percentage of these trades going positive if I just buy the middle of my signal bar? You don't know. It might be 70%. It might be 65, 70%. Something to think about there. Personally, I got to tell you, my personality always comes out when I'm trading. Take the money. So we had a pretty good trade over here. We had a couple of pretty good trades right there. The beauty of executing like this, I know it's sort of intricate and it's out there in the weeds, but when you execute here, we made the trade in the middle of the market. That's called playing the middle. Now, the beauty of playing the middle is nobody can see you. You're in and you're out. Nobody can see you. The market didn't break up, didn't really break down, didn't do much of anything, yet we made money. That's called playing the middle. Now, up here, where we're sort of buying the top, maybe buying the top of a periodic range, we're playing a breakout. We're playing an upper extreme. We're playing the top. We're playing price extension. If we sell at the bottom, we're sort of playing price extension. We're betting that the market is going to move and push those daily lows. Everybody can see us doing business there. Everybody. But when we're in the middle, we're like ninjas. I mean, we're in, we're out. Nobody saw us make that trade, and nobody cares. And I got to tell you, playing the middle is pretty cool. No question about it. That's exactly what this trade was here, playing the middle. Now take a look at how miserable this would have been. We would have went up, not got filled, probably taken a loss, and now price is right back up to our point of control. Welcome to rotational trading. Can be very, very frustrating. Very frustrating. So for WTI, do I want to be long or short right now? Neither. It's too risky, too much in the news, way too much going on. That's for sure. All right, everybody, we do have a few fundamentals that I'd like to cover today. Not many, though, and then we'll get back over. Check out the dollar yen. I also wanted to look at the NASDAQ 100 as well. If you have any other, let's see. Good day, Joshua. Good day. Sorry, I got way behind on the live chat. Everybody's probably gone that messaged me, but yeah, good to see you, Joshua. Welcome. Let me see Packup. Good to see you, Packup. The swings today at the New York Open were crazy, up and down like a yo-yo. It's the news. 100% the news. You've got profit taking ahead of the SpaceX IPO. You've got CPI live. We'll have CPI for you tomorrow. And then you've got Trump running his mouth legitimately every hour on the hour, talking about the Iran war. Supposedly there's a rift between Trump and Netanyahu that potentially Trump told him to shut down the strikes that he's doing in his region. I don't know, and nobody really knows. But we do know this. The markets are all over the place. A little bit of bearish sentiment is creeping in, though, and people are getting a little bit skeptical, especially with that NASDAQ. We're going to look at the NAS 100 here in just a second. Kelvin, let me see. Let me see. Packup. I chased the NASDAQ and Dow Jones Industrial down and up and down, up, down, just to make a tiny, tiny bit of profit. Yeah. If you find yourself chasing price, you're probably better off just going and getting some lunch. I'm glad it worked out for you. The problem with chasing price around, going up, down, up, down, is that when you start losing, you'll lose 3, 4, 5, 6 in a row, and it's really not your fault. It's just that the market gets super choppy. From my experience, the worst days I've ever had have been in choppy markets, not trending. Sometimes I get caught fighting a trend, but those are pretty easy. You just get out. You just take a stop and get out. What really is a challenge and where you can lose a lot of money, and I'm not kidding you, you can lose a lot of money in stuff like this. When you're waiting for that move off of your point of control and it fades against you, you take a loss, and then you sell your point of control, and now it rotates back up and you take another loss. All of a sudden, you've taken 3 or 4 or 5 consecutive losses. Even though they're small, it's still significant. It adds up. Very, very challenging to execute consistently in that environment. That's for sure. All right, let's see. What's your opinion on the gold monthly? Kelvin, I'll cover gold monthly here in just a second. I mean, we're on the move, so that's good. That's actually a good pull. I'll pull the gold monthly next. Then we'll look at the dollar yen. Our gold trade from the other day, we're starting to look pretty smart. Starting to look pretty smart about cutting that one off, the one we executed during NFP. All right, we'll go ahead and roll over it. First loss is your best loss. Remember that. All right, here we go. Week 24. I'm just going to briefly touch on a few fundamentals, and then we'll get back out to price action. We'll go gold, dollar, yen, NASDAQ 100. And if you guys have anything else you'd love to look at, let me know. More than happy to do just that. Monday was the weekend news cycle. It was all about the war, kinetic strikes. We'll see exactly what develops If a piece is coming, we don't know. Tuesday was existing home sales. That's what we're going to cover today for May. Not necessarily a 5-star event, but one that may have confused you a little bit, Packham, if you didn't know where the action was coming from. This one was during the U.S. session that it was released, so we're going to go ahead and take a look at that. Tomorrow's U.S. CPI, I'll have CPI live for you, and also the Bank of Canada getting involved. The BOC expected to hold interest rates static. We'll talk a little bit about the BOC tomorrow as well, because we will be on ahead of their decision. Thursday's the ECB interest rate decision. Won't be covering that one live, because I'm not going to get up in the middle of the night. Tomorrow's early enough, getting up at about 4:30, but any earlier than that, and life starts getting pretty hazy on my end. So ECB interest rate decisions up tomorrow. We will definitely be recapping and trading those euro pairs definitely as we roll into the Thursday session. And then Friday, SpaceX IPO live. I really don't know what to expect. I've never covered an IPO live. We're going to have some reports. We might even get a live news feed and see if they can go to the floor and see when exactly this thing is going to be released to the public. I don't know just yet, but we'll deliver some sort of value, and we'll just be looking at that SpaceX IPO and sort of the buzz and the excitement and see if we can't look at all of our other markets as well. So definitely tune in for that. Let me see. Fresi makes sense, Packup. I only trade through through NASDAQ 100 and German 40. Yeah, I mean, know your roles, know your expertise, your best markets. Oftentimes will make you the most money. I know that sounds stupid, but a lot of folks try to trade 50 markets. You don't need to do that. Just trade a few good ones, then get really good at them. News of the day, existing home sales came out here in the United States, 4.17 million over the 4.07 expected, and up from 4.04, an upward revision. Existing home sales were up through 3.2% for May. The rest of it, we're going to ignore. GDP now, 3.3%, suggests there is some GDP growth from the Atlanta Fed. But once again, those numbers are sus. Those are suspect. So I wouldn't even worry about that. But this existing home sales, a lot of people are running away with it. They're saying, oh, the economy's great. Existing home sales are up. And they are up, but it's seasonal. I mean, let's be honest. Now we're getting into the buying months of the year, May, June, July, and August. Typically in the Northern Hemisphere, at least in the United States, that's when homes are purchased. Typically, you don't see as many. Now that it's not true. I mean, a lot of people buy in the winter times in the warmer regions. Selling season traditionally is throughout the trading year, places like Florida, places like Texas, California. But when you start talking about the bulk of the United States that actually deal with the winter, then the spring months and the summer months are big for home sales. So it does not surprise me at all that existing home sales ticked higher for May. It didn't surprise the market. Interest rates are still high, but we're looking for this trend more than likely to continue through June. And then after that, I would start expecting these sales to sort of come down until interest rates move down. And for a home loan, you're pretty much going to be paying over 7% more than likely. The average is about 6.7, but that's for well-qualified buyers that have 20% down and all sorts of street cred with their financial situation. But if you're just an average run-of-the-mill buyer that maybe your credit's not great and maybe you can't put a lot down, you're going to be paying a lot more than 6.5%. Went down and shopped auto loans yesterday. Just as a quick aside, they wanted 8.6% for an auto loan. That's a staggering sum. I don't know who's buying new trucks and cars at 8.6% for an auto loan, but that blew me away. That blew me away. That is really, really, really high. So the sticker prices need to start coming down to reflect the fact that, starting to finance these big ticket items is a major issue, and it will be an economic drag. So something to think about there, right? If we're talking broader economic picture. Just very briefly, though, existing home sales in the United States rose by 3.2% from the previous month to an annualized rate of 4.17 million, extending the rebound from the 7-month low in March. 7-month low, why? Interest rates are up, winter months. It's that simple. That's why you were at a 7-month low in March. I wouldn't worry too much about it. Don't read too much into this. This is the chart that I think everybody should probably take note of when it comes to existing home sales. Now, there's a lot of reasons why these levels are depressed here. You can see very high, very healthy real estate markets up in here. I was doing business right in this area, and it was a fair market. It felt like it was fair. The prices were certainly up over the last 10 years significantly, but it was a fair market. People could go buy a house for a decent sum and have a place to live. And then COVID came. Home sales dropped down to nothing in the immediate aftermath of COVID, just because the real estate operations pretty much shut down. But after they reopened and at 0% interest, you can see what happened to all the existing home sales. Now, an existing home is one that's already built. It's not a brand new home. It's not new construction. So when you see this, That's a tremendous amount of homes that were bought, tremendous amount of homes that were purchased. And a lot of these folks here are still under those 0%, 1% loans. Now, the thing to watch is called an adjustable rate mortgage, 5 in one arm, 7 in one arm. Those essentially mean that your interest rates are going to go to the variable rate after X amount of time, 5 and 7. Everybody that bought back here at 0% or 1%, maybe 2% on their mortgages that was involved in a 5 in one arm or a 7 in one arm, meaning the interest rates go variable after 5 years or after 7 years, are going to be liquidating very soon, if they haven't already. Because you don't go from 2% and finance, and then they were writing $1 million checks. They really were. So let's say we finance $500,000 at 2% or something. It's doable. You can make those payments, and when it goes from 2% to 8%, you're out of there, kid. You got to sell. You got to sell. So this is going to be an interesting situation to monitor, but this chart tells us everything we need to know. Very healthy market, very steady. Notice the peaks and valleys from 2016 to 2020 weren't there. And then COVID, that monetary policy, 0% for everybody, that changed the game. Now everything's been very quiet. Folks that had those loans don't want to move. And if you got a 1 or 2% 30-year mortgage, then why would you ever move? I wouldn't. But this right here, this is interesting. It's very, very much depressed from here, but also from those pre-COVID levels. So this lull expected with COVID, this spike, completely a product of unlimited quantitative easing, but this depressed level shows you that something is very, very wrong in the homes market. It's very wrong because it's not like it was back then. Look at these levels. It means there's no turnover. All right, that's my spiel on real estate. We could talk real estate for the next 4 hours, and I could give you my opinions. They're pretty fiery. I'd give you a hot take on real estate. All right, gold. I love gold. You can see right here, spike low right there, or spike high, spike low. We talked about that level yesterday, 43.63. You can see it painted it beautifully. Let's go back to a 30-minute chart and see exactly how that unfolded, and there it was. I mean, there was your sell right there, right on the U.S. Open. I mean, that's beautiful. When you talk about the effectiveness or the efficacy of a Fibonacci retracement sequence, that is beautiful. Daily Fibonacci, nice pullback there. So we missed it, of course, but, that's life. We miss things. We'll just get ready for the next one. Spike high, spike low, pullback. What does that mean when price fails exactly at 38%? What does it mean? It means we're trending. It means we're trending and we broke. Now, this shouldn't surprise anybody. We had a very, very hot level right up in this zone. Let's just take this down to, a weekly? Go to a weekly. So this zone right up in here, we traded last NFP, which was last Friday. Seems like a lifetime ago already. We traded that. We missed. We cut this trade off very quickly. Very quickly. Saved us a fortune. Saved us an account. So when we're looking at gold and you're saying, okay, what should I be even looking at here? Well, the weekly chart, not a tremendous amount of help. Probably be looking at this spike low, which you'll see in a minute coincides with a monthly Fibonacci retracement. That low right there is important. That swing low, big bullish liquidity sweep, right down around 4,098. So 4,100. Start thinking about it. Put that one in your queue. We can run Fibonacci's from here to here. There's no reason to. There really is no reason to. We've sort of already broken to the downside. And as you can see, we're filling in this doji sort of slowly but surely, right? So let's go back to a monthly. Take a look at our levels. Interesting. After all the euphoria really to open the year, 2026, I mean, gold's flying high, 5,600. It's been bearish. Since the Iran war has started, it has been bearish. So we saw the big bearish move, sell-off of about 12% for March, and then we just went sideways, and now we broke to the bear again for June. It's really ugly out there, negative 6%. We've got a key level right down there at 41.9350. That would be my monthly 13-month EMA. I would be extremely aware of that. We'll go ahead and color it blue so we can reference this tomorrow. But this level right here, don't lose track of that one. Potential downside support, if nothing else, more than likely a speed bump. But you can see down there 41.9350. Pretty good level to be maybe taking an intraday long. That could get you involved with a little bit of meaning. As far as this goes right here, there's your spike low. It's where we've been basing our Fibonacci's. November of 24. All the way up to that top, which is right around 5,600. I'm just eyeballing these for good measure. And what do you have? Well, I mean, we can dial it in, I guess, 98, 40, 98, I suppose. 54.98. Something like that. That's not it. I'm just going to eyeball it. You have to bear with me. That's ballpark. So somewhere right around that 44.25, if you remember, we were playing the scalps off of there. It was good. That level was absolute money in the bank for quite a while. You can see right there, 1, 2, 3. I mean, these are just great trades. And then NFP came along, and we said, what happened? Well, as soon as we broke, we knew we had to get out, and we were just scalping. But pretty good market call, realistically, pretty good market call as far as saving. How much money can you save? We saved a fortune there by just pulling the plug on it. So great illustration of get out. First loss is the best loss. But something like this, I mean, 41.93, love it. Moving average. 50% down there at 4,065, somewhere in there. Don't love it. I'm not going to play 50%. I'm not interested in it. But this zone right in here, you can definitely see this area right here, 62%, 37, somewhere in there. That's the one that probably will pay the rent, realistically. This one right here. That's the one that'll pay the bills. Do we get a deep retracement like that? I think anything's possible. I really do. This market is finally starting to break. It's showing some signs of life. After just 2 months of complete rotation, this feels to me like somebody believes something's going to happen in the near future, and gold is on the move. Broke beneath 38%. That's the big one, and now we're coming down. Now we're coming down in a big way. I would love to hold out for 37. I think that this summer, if we could get that, I think that's a real high probability trade. But this moving average isn't bad either. I'll say it one more time, 41.93, 42 even. More than likely, you're going to get some bidders at 42 even. So something definitely to keep an eye on there in that gold market. All right, NASDAQ 100 and the dollar yen, and we'll call it a day unless there's anything else. Support zone. This is one that I did in the analysis, the live analysis, or the taped analysis that we did for our switch on hot picks. You can see right here, key numbers 30,000. The NASDAQ compressed there for 2 weeks, right at 30,000. Now we've sort of sold off, and life's not looking too rosy out there in the NASDAQ right now. We're being challenged. This weekly trend is being challenged a bit. I love the support zone. The support zone that's developed down there at 38%, 27,710, 27,750, maybe 28,000. It's fantastic. We've got an EMA, a 13-week EMA down there at 27,737. So that 27,750 would be great if we could get it, but 28 even, probably going to be pretty good as well. Definitely one of those levels that I'm watching closely going into SpaceX. Is this profit taking right now ahead of SpaceX so people are liquidating so they can buy some SpaceX? I don't know. I think we got to make that argument, though. We really do, because as far as why would all of a sudden the NASDAQ just truck along and then fall apart in the last 2 weeks? I mean, it shows you how volatile this thing really is, and that things, nothing goes up forever. Well, maybe the NASDAQ does. But, the support zone there is very real. And if we get a shot at it, we're in great shape to have a winning trade. So I'm watching that closely there in the US 100. Okay, dollar yen. Dollar yen is simple. I didn't really incorporate any indicators, any Fibonacci's, any moving averages. And I did it because you just don't need them. You don't really need them. This is pure price action here. This is reading a chart. A lot of folks with, ICT folks do this. I say that every day now because seemingly every day I have another ICT person reach out and say, Shane, that's a liquidity grab, or that's a fair value gap, or whatever. Listen, where I'm from, I'm just looking at key levels. Yearly highs are always a big deal. They're always a big deal. Now, what would make 2026's high a big deal? 6 months in. So that's actually a 6-month high right there in this market. So we're looking at that closely at about 160.72. So that area right there could shape up to be nice short-term resistance. We're going to be looking at this one tomorrow before CPI. This is going to be probably a banger, one that we want to be trading, the dollar yen. And then also the 2024 high, which to me is an even bigger deal. And that's up there right at 162. So that, I can't really stress those levels enough. I think you could probably set up a short scalp around 170 or 160.75. I'm not really too interested in it, though. I'd just as soon hold out for the premium. I would rather hold out to sell up there right around 162. I think that's going to be a pretty good trade. That's going to give us an opportunity to succeed, not just a little bit, but maybe take a chunk, maybe take a couple hundred pips, something like that could be good. Do we go higher than 162? Anything is possible. Anything is possible. This market's rocking and rolling to the top side. Anything truly is possible. And I would definitely keep a close eye on my wallet if I was shorting this. This feels to me like there could be definitely a breakout there, but our key levels should bring a little bit of compression. I don't love 160.75. Don't love it. I really like 162. I think that could be a great trade. All right, everybody. I think that's probably enough for today. We've covered just a ton of stuff. Here's the VIX. Give a look at the VIX. All of a sudden, the VIX back from the dead, right? We were just severely depressed down there during this big May rally that we saw in equities, and now we've jumped right back to that LTA, that long-term average, right at 21, and I think that's very important to understand where we are in the VIX. We're sort of the volatility index, remember, that scopes out the angst, the deferred month premiums of S&P 500 options contracts. As those premiums become more volatile, you see the VIX go up. That's why they call it the fear gauge, right? So we're talking about volatility. We're talking about implied volatility, and not historic, but definitely future implied. You're watching the market sort of not know what to do at this point. 3 months of war, 100 days of war. How did we price it? Very simply, the initial shock scared everybody. Then what happened? That's how efficient markets can be. Everything just settled down. They said, okay, Strait of Hormuz is closed. What's really going to change in the future? Nothing. And that's what we've seen out of the VIX, a very flat VIX over the past 90 days, very small range over the past 60. And so we broke back to that LTA, that long-term average. Shouldn't surprise anybody. Could the VIX move significantly? I don't know. I think it would take some major escalation. We would have to see perhaps, you don't even want to talk about it, but I've made the point in the past, privately, I guess I might as well just say it publicly, but potentially the case of a tactical nuclear weapon being used. That would send the VIX reeling. You would see the VIX absolutely explode because it would really set the world on a new path geopolitically. Every threat escalation ladder out there, going back to the Rand Corporation, basically say that once one nuclear weapon is used, more are certain to be used. That's the escalation ladder. Now, I don't know, though. I don't know. I mean, a tactical nuclear weapon being detonated as maybe a test. There's a lot of rumors that Iran has a nuclear weapon now. Does the United States open the Strait of Hormuz using a tactical nuke or a high grade, maybe a Moab or something? Those are the types of things that would bring incredible angst and risk premiums into the market. No question. So we're watching everything. I always have that as sort of an outlier event. I don't believe it's going to happen. I truly wish that it doesn't happen. But when we start talking about what could really move this needle, well, it's not going to be peace deals. Peace deals will send it probably down to 10. What could send it back to 30 or 40 or 50? Pandemics, things like that. Those pandemics have sort of dried up. We'll talk a little bit about the screw worm here in the United States later on this week as that's affecting beef prices. The outbreak has not been contained yet, so that's going to be a big story for agriculture as we roll into the summer months. But as far as stocks go, as far as currencies go and stocks go, what could move this VIX? That really is the question right now. What could move the VIX? What could bring fear into the market and bring on a crash? Bank failures, pandemics, tactical nuclear weapons, all the worst parts of our psyches, all of our worst dreams. That basically is it. So stay tuned, beware. We're not there yet. I think things are very normal. Just by looking at that LTA at 21, a lot of folks were crying today about the VIX spiking. It's not spiking. It's flat. It really is flat. So we're going to stay tuned. The big story is coming out is going to be Trump. Everything Trump says about the Iran war and peace, potentially a peace deal. That'll be interesting. If they can pull that off in the next 48 to 72 hours. I don't have no idea what that's going to look like, but we could definitely trade it. I know that. Tomorrow's CPI report, though, is going to be our intermediate term banger. It's going to be a good report to watch. BOC, Bank of Canada tomorrow, and then the ECB on Thursday, Friday, SpaceX Day. So a lot going on the rest of this week. I think it's a fantastic week to be in the saddle. We had a couple pretty good trades here in the oil markets for our live stream. But all in all, pretty darn good trading day. Remember, if it moves, we can trade it. If it has a pulse, we can trade it. And that's essentially what we had today. We had a nice trading day, and as we roll into tomorrow and CPI, really in a solid position this week to really have a great week. So I'm confident that many of you are having a great week as well. That's for sure. All right, everybody, I'm going to go ahead and sign off for right now. We've gone on long enough, about an hour. If you have any questions at all, be sure to reach out to How to Trade, howtotrade.com. Get your free, absolutely free subscription. You contact me directly there. Send me a private message. Tell me what you think about the streams. Tell me what you think about really anything. Any questions, be sure to ask. I'll do my best to help. If you need anything at all, that's where you can find me most days. I'm there quite late. As far as what we're doing now, going into tomorrow's session, feeling pretty good about where the U.S. dollar is. 99. DXY is right at 99, right at about 100. That's a pretty fair valuation. We're going to get some movement out of the dollar tomorrow on CPI. Cover that for you live. We'll be here about 10 minutes before the number drops, so be sure to drop in as well. Bring your questions. Anything you need to know, just be sure to ask. As far as any market calls for the rest of today, not really. I mean, the work should pretty much already be done. A lot of great trades out there today, that's for sure. All right, everybody. Fantastic. You have a great trading session. And as always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way,